I scored a World Rank 2 in Advanced Financial Management ACCA. And if you're looking to do the same, you have come at the right place. So, if you're looking to just pass or you want to score a really good mark, this video will do both for you. So, let's get started. Before we move on to any sort of guide, we need to first understand what is AFM even about in the first place. Right. So, what is advanced financial management? So, I've taken a very simple example over here, and that is of Mr. X. So, Mr. X is a financial manager, and he's working currently at Goldman Sachs. Right. And for the sake of simplicity for AFM, we have taken three decisions which are within the scope of the examination, which is the investment decision, the financing decision, and the dividend decision. So, a manager concerns themselves with these three main decisions when we are talking about AFM. Let's look at the first decision. The first decision is investment decision. So, we all know a joint stock company when people subscribe to a certain stock, they expect a certain rate of return from it. So they expect, let's say, an increase in their price, and second is they expect a dividend out of it, right? So how would the company make sure that the company's price goes up, share price goes up, and they are able to give back a dividend? Because where exactly is dividend given from? Dividend is given from the profit after tax, right? And in order to earn a profit, the company needs to carry out projects. So how are those projects decided? So that is where the board of directors come in. The board of directors make the strategic decisions, right? They evaluate certain choices, right? And then they give this over. The financial aspect is being evaluated by the financial team, right? So these, financial managers, they'll come together and they'll evaluate whether this decision is better than the rest, right? Whether decision A is better than decision B, financially speaking, right? And from those decisions, once the decisions are financially evaluated, the best ones in terms of strategy, in terms of profit, are chosen, right? So very basic over here, that is the investment decision, basically using techniques like net present value, right, discounting the cash flows, NPV, and various other techniques. The financial team can understand which decision is better than the other, right? So which project to go ahead. So that is regarding the investment decision. That is why it's called the investment decision, because you're choosing among investments. You could make it an investment A, investment B, investment C, but which one would you go ahead with for the maximum profit? Because the board of directors, right, or the company, I would say for better say, does not have unlimited cash, right? They only have a limited amount of cash to put into uh, you know, a few amount of projects. Then we move on to the financing decision. So once we have decided that, all right, let's go with decision A, right? Maybe we have decided that we are going to go with decision A. So once we have decided that we're going to go with decision A, and let's say we have worked out the, profit, right? We have worked out the profit, right? We need to first understand, where do we raise that finance from? Because let's say the investment required is $100 million, right? The investment required is $100 million. Where will we get these, all these dollars from? Is the question, right? Do we take it from equity? Do we raise that amount of investment from debt? Or do we take that investment from our retained earnings? So, which resource do we draw from? Or do we need to use a combination of all these resources, right? So, do we use, equity also? Do we also use debt and we use retained earnings? Okay, so it depends on what the company is aiming for, but what we need to understand is debt is always cheaper than equity, and retained earnings is always the cheapest, right? So I won't be explaining the reasoning exactly right now, right? Because that's a whole nother talk of its own. But all resources, right? All resources, equity, debt, and retained earnings, all avenues, they serve different purposes, and managers choose accordingly. Okay. So once that has been decided, right? Once the management has decided that, hey, we're going to go for, let's say debt, right? They have decided that the $100 million of investment, they're going to pull through debt. The next decision, right? Once we have invested that amount into the project, right? We have raised the $100 million. Let's say we have raised the $100 million, and it is through debt, right? And once the project has started, right, and the project then starts generating profits for the firm, right, because it is going to generate profits. Now, the last question in line is, we end up, right, in the statement of profit and loss, we end up with the PAT at the end of the day, right? We end up with something called the profit after tax. Now, this profit after tax can be split into two parts mainly, and that is, it can either go to dividends, right, or it can go to retained earnings, right? So it can go to retained earnings. So either the management can distribute it into dividends, right? Or it can save most of this profit and put it into retained earnings. Now it depends on what stage the company is at, what is the company trying to do, and various factors, right? If the company, let's say it's a startup, right? If it's a startup, they're not going to give out dividends. They will put most of their cash into retained earnings. Why exactly? Because they need cash to grow, right? Heavy marketing expenditure exists, heavy R&D expenditure exists in startups, right? So how will they fund all that? They can't afford to give out dividends, right? They can't afford to give out the money back to the shareholders. They'll tell the shareholders that, hey, you need to hold on. We'll not give you any dividend at the moment, but we'll guarantee you that because we are saving most of this money, right, putting it into retained earnings and then investing in the next year, we're going to make, let's say, XYZ more profit, right? Which in the long term will increase the share price, right? And once the share price increases, we all know that shareholder return is a construction of, basically, if I were to simply put it, shareholder return, right, is a construction of, my bad, dividends plus share price increase. That is what makes up a shareholder's rate of return. Okay. So the startup will tell them, right, that we won't pay out dividends, but we'll ensure this happens vastly, right? Because startups can go from 1 to 100, right? A conglomerate cannot go from 100 to 10,000, right? So again, depends on a lot of things, right? And then if the company wants to pay out dividend, right? So a startup will of course not pay out dividend, but sorry, let's say it's a matured firm, right? And they do want to pay out dividends. So what sort of payment pattern are we going for? Are we going for a stable dividend pattern, right? So maybe the graph looks like this, right? It's growing steadily like this. Or are we looking for residual earnings, or are we looking for a ratchet pattern? These all the company will have to understand. Now I've understood what exactly you know concerns advanced financial management. Now we need to understand the syllabus roadmap behind it. All right. So when we talk about the syllabus roadmap, I've split it into four parts: investment appraisal, risk management, mergers and acquisitions, corporate reconstruction. So again, I've split them into two categories. Actually, three categories. There's one more slide, but for now on your screen there are two. So we have your cash crops, right? And these are a guaranteed ask in the paper. Okay. So investment appraisal, risk management, it's always there. You cannot ignore it. If you're short on time, right? If you're watching this video and you're short on time, I would 100% recommend go ahead with investment appraisal and risk management. You need to be thorough with them. They always pop up, right? You can of course see the difficulty level also. So investment appraisal is the easier, I would say one of the easier areas to understand, and although it's a little lengthy, you can make mistakes in investment appraisal. It happens often, right? But for risk management, it's a little more abstract to understand for many folks, right? Many folks are very new to this, especially if they've not done FM. So it's very hard to understand, but it is, if not the easiest areas to go about, because the questions don't change much, right? It's always the same, and you can go about it very easily, right? It's not difficult at all, right? It's very methodical. You just follow step one, step two, step three, and you're done with it. That is how risk management is. You can also see the probability of them appearing as a 50 marker and 25 marker. So investment appraisal usually tends to appear as a 50 marker, right? And risk management tends to usually appear as a 25 marker, right? In section B. But one thing I want to warn you all about is this is just a probability at the end of the day. It can come as either a 25 or a 50. You don't know. All right. Uh, just before I go ahead, I'll quickly tell you about the AFM structure, right? The question paper structure. I had not gone over it. Let me quickly switch slides. So AFM is basically two sections. So we have section A, right? And we have section B. So section A is 150 marker, right? And section B is 225 markers, right? And you get the standard 195 minutes on the clock, right? So that is the structure of AFM. Now that we have covered the cash crops, right, we need to understand the not guaranteed ones. But these are, of course, very important. Not guaranteed in the sense that they won't appear. I meant in the sense that these areas, right, mergers and acquisitions and corporate reconstruction, either one of them will appear. Okay, so it will be either mergers and acquisitions that will appear or corporate reconstruction that might appear. Right. So again, mergers and acquisition, very easy to understand as usual, and it's also very easy to carry out because the thing is, it draws from investment appraisal. Most of the techniques draws from investment appraisal, so it's not really hard to wrap your head around. Corporate reconstruction can be again a little abstract, but it's very methodical, right? It's also easy to do. It's something like risk management, in my opinion, right? They can appear as both a section B, section A. There isn't a probability that I would like to assign to both of them. So they can appear as either a 50 or either as a 25. It doesn't really make sense to give them a probability at the current stage. The third type of syllabus area which I would like to, greet you with is the role of the senior financial manager. Okay. And the unique thing about this sector is that it's very, very theory based. Okay. And it can be a very, very huge curveball. What do I mean by this? Let's say they might give you a 25 marker to evaluate a company with ratios, right? They'll say that, hey, you have to evaluate the company for an investment through ratios. And many people will end up skipping ratios in the AFM syllabus because, well, it's not, really tested as much. But it can be a huge curveball. You don't know, right? So if you have time, I would still recommend going through the entire syllabus, right? So you should also know this role of the financial manager. So it concerns with things like financing decision, right? It's usually theory based. It's 99% of it. It's theory based, so financing decision, dividend decision, right? And your ratios and so on and so forth. Okay. So this is in general the syllabus roadmap. Okay. You can again rewind the video and watch it and read through it. Usually appears as a 25 marker, by the way. So these are things I would tell people to, before they begin with AFM, I would want these concepts to be mastered by many people out here, right? Linear algebra. So many of you all would be working, so I would still recommend that, maybe accustom yourself with some linear algebra, right? Uh, One variable, two, I wouldn't say two variables, they don't pop up. One variable algebra, you should be comfortable with, right? Addition, subtraction, multiplication, division of variables, uh, linear equations in general, right? The second is basic economics can go a long way. So maybe, staying abreast with whatever is happening around the world, knowing basic economics is also very, very pivotal. If I would like to, elaborate on it, basic economics, my base of economics came in very handy for writing down a certain 50 marker uh, during my session, right? When I had attempted the paper. So it went a long way. And concepts from FM, right? So FM, of course, it's called AFM because it builds up from FM. So you need to know many things from FM, which, they're not really covered in AFM in any study text and so on. So you need to kind of go back towards FM, read through those areas because they can also pop up in AFM, right? It's not it's explicitly written somewhere, but it's heavily implied that whatever you have learned from FM can come up in AFM very well. Now we'll go over some quick beginner mistakes. Again, very basic. Do not save things for the last 15 days, right? You need to work daily, be consistent with it. Do not skip out on technical articles, right? Although many technical articles do appear in the study text itself, depending on which provider you choose, uh, I would still recommend for certain ones, right? Especially relating to risk management, to go onto ACCA's website and read them up. Really nice articles. AFM is a very repeatable subject. I wanted to tell you all this. It's not really hard to wrap your head around. And if you do the exam kit twice, you're guaranteed a pass, right? Leave alone a pass, you're guaranteed above a 70, right? That's that. Do not ignore less tested syllabus areas. Many people tend to skip out on certain subtopics like Islamic finance, for example. And Islamic finance just might get you, let's say you are currently stuck at a 46, and if you had answered that Islamic finance sub question for 4 5 marks, you would be over a 50. You do not know, right? So always read through the entire syllabus. Okay. And do not aim for just a pass. This is my personal advice, but do not just aim that, I'll get over a 50 and I'm done with it. Aim for a 70 plus, 80 plus, right? You do not know, always have to aim for a rank. I'm not saying you need to go for something crazy, but aim for a good mark, because at least there's something I follow personally, some a saying I follow: if you aim for the stars, you'll at least guarantee yourself on the moon. So at least you'll pass, right? Even if you don't get that 70 plus, you'll still pass. Okay. Right. So how would I split my time? I would approximately say, again, the basic tips: do the exam kit twice, right? Practice a lot of exam kit questions. You don't need a lot of breadth. Do not collect, hundreds of sources of questions of PYPs and then think that, you'll do each one once and you'll be done with it. I would instead recommend to repeat practice. Okay, repeat the practice. One question done 2 times would yield much better benefits than you doing two random questions and not looking back at them again, right? Um, and of course, split your time, right? I would normally recommend a 50-50 split. So 50 for your fundamentals and 50 for practice, right? Uh, Others follow a different way of about it, right? Many people say spend more time practicing, some spend more time, going through the syllabus. It depends on what your personal circumstances are, right? But if you're a full-time student and you have time, I would recommend a 50-50 split. Spend 50% of your time going through the fundamentals, because the exam kit does not cover every sort of question that can appear, by the way. In the recent session, there was a question on margin calls, right? And margin calls is something you would only know if you have gone through the study text fundamentally and you know everything. It's not something you would, remember if you have just been practicing questions, right? So again, it depends on a lot of opportunity cost, how you want to go about it, and so on and so forth, right? So that is about AFM, right? What I would tell you about AFM in general, right? If you're looking for structured guidance on ACCA AFM and want someone to hold your hand and make your journey much, much easier for you, please head over to www.afmadvantage.com. I have a practice platform over there with a couple of free resources, right? We also offer courses on our website. So if you're looking for, just structured guidance, or if you're looking for the entire package, from A to Z, so you want lives, you want recorded lectures, everything under the sun, we offer those as well. I have students from all around the globe, and I can guarantee you'll have an experience like no other. So again, if you want to access all of that, or you just want to explore ACCA AFM in general, go to www.afmadvantage.com. Thank you so much for watching this video, and again, I'll be solving questions live on this YouTube channel, right? So in case you want any guidance on questions as well, please like and subscribe, because again, you can view those questions later down the line when they do end up popping up in your feed. Thank you so much again, and have a great day forward.